Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi, and Mangalam is joining in today as well. Guys, hi, good morning.
Good morning.
Morning, Prashant. Morning, Mangalam. I don't care what the cues are today. The most important cue, you guys already know it. It's the weekend. It's Friday.
Well, it is Friday, but the kind of news that we have is worth 3 Mondays, I guess. So much happening. The unexpected resignation, that's what everyone's going to talk about today.
Oh, yeah. That and of course, it's not as if the global news flow is abated, right?
Yeah.
I was telling someone that same time last week seems like such a long time ago, right? It was almost like a year ago because so much has transpired in the last 4 or 5 days. So let's start by telling you what happened overnight, what you need to know, and just set you up for the trade this morning. So the news is all good. This is different from what the previous few sessions have thrown our way. We have a strong rebound, strong broad-based rally in the US market. And I say broad-based because if you look at the NYSE advanced decline ratio, it's about 3:1. 3 up for 1 down. So this is good news. Russell 2000, the small cap index also went up sharply. The S&P and NASDAQ are up on your screen. Now, the trouble spots, which are banks, also did well. So you look at the European Bank Index, which has been the epicenter of the crisis recently, 1%. And you got the US Bank Index measure, which went up about 2.6%. Again, sort of decent news flow. You have news flow, not bad, or some are saying, well, this is not good either. But for what it's worth, you have a consortium of 11 banks coming together in the US and putting in a $30 billion deposit into First Republic Bank, which was one of the banks which was also looking a little shaky. This is not equity. This is just uninsured deposit into FRC, which has been announced. Some are calling it a creative private market solution, which basically allows the government to stay away and not put much of its money on the line if need be with other banks, etc. But this is interesting. This did help sentiment overnight, and I think the rally in banks in US overnight started after this particular announcement. US yields have had an absolutely wild ride, and yesterday they went up about 12 basis points. We are back at about 3.58%. So that is the yields for you. Data also, by the way, we had 2 or 3 data points, macro data points, all of which were calling for the Fed to hike rates next week, right? So market is very quickly priced back rates, priced in rates once again from the March FOMC, which is on the 22nd. They'd completely gone to zero. Well, we are back at a solid 25 next week. Well, before the Fed, ECB met yesterday, and they've hiked rates by 50 basis points. Despite that, this is largely being seen as a dovish hike because they completely scrapped and shied away from giving any future guidance. In a way, I guess makes sense. They want to insulate themselves from all of the uncertainty, saying something right now and being caught in it because things change. So no forward guidance, and that's the reason why this is, despite the 50 basis point magnitude of the hike, is being seen as dovish. Now, let's just quickly come to the local market here. Nifty and Bank Nifty both saw a positive daily close after 5 sessions of losses. This is, I think, unambiguously positive. We've not had that for 5 days. 5 days of sharp cuts, about 800 points given back, and yesterday a feeble pullback, but a positive daily close. Now, the Nifty needs to protect the low of 16,850. We had various technical analysts coming in and saying, basically, there is a gap at about 16,800. 16,850 is what the market got to, so that becomes the level which the market needs to protect after the gap up this morning. The levels on the upside are 17,220. This is a sort of a technical level. We want, and I've been putting this out for the last 2-3 days. Once the Nifty starts trading above this for some time, I think it's a kind of a short-term reversal level. Above this, right? I'm probably saying too much too fast, but 38% retracement of the fall, recent fall, which has been 19 days worth, is 17,340. So 17,220 and then 17,340 are the two levels. For the Bank Nifty, again, we saw a positive daily close. Yesterday's low of 38,613 should be protected. Upside levels on the Bank Nifty are 39,740, which is the short-term reversal level, same for like for the Nifty. And the retracement for the Bank Nifty is 40,296. The Fibonacci retracement then comes in at 40,296. I just want to end by saying this, that people have been anticipating a bounce, a turn, which has not happened. Markets have been sold on every rise. So there is this feeling of burnt fingers. And I think that should keep the market light, sentiment fragile, and a bit jumpy as well. So keep that in mind as you look to trade these markets. Yesterday in the morning, the call was better to just stay out. It's just too volatile. And I think unless you see the market trade up for a while, I think better to just wait and watch once again this Friday morning. Surabhi, hi.
Hi, Prashant. Morning. So, I've been wondering what to call this. Is it a Friday filled with relief, or is it just an uneasy temporary calm that we've got for now? I think we'll have the answers in due course. But I just wanted to take off from what you mentioned on the ECB. I think yesterday what we got from the European Central Bank was a very fine balance. They managed to keep the markets happy despite raising rates by 50 basis points, and the commentary remained very sort of accommodative in the sense that, giving the market an indication that we're really there. I want to put up Christine Lagarde's quote, and I think that was a very interesting statement that she came out with. She did go back to the GFC parallel, saying, I was around in 2008, so I have a very clear reflection of what happened and what we had to do. We did reform the framework. We did agree on Basel III. We did increase the capital ratios. The banking sector is currently in a much, much stronger position. That was a remark during the press conference. And I think a lot of that body language, the positioning, the posturing, the statements, all of that worked very well for the market, at least yesterday. And that really powered up the relief rally. The euro moved higher. I just want to mention the dollar. The dollar is doing a very interesting thing this morning. It's again climbing down very sharply. Now, if the expectation is that the Fed is going to take a cue from the ECB and hike in the coming week, why is the dollar declining? But there are so many other factors at play here. It's not a unilateral move only on one cue. So that's the dollar index for today. Now, the other cue, which Prashant alluded to, this coming together, this, brotherhood of banks on Wall Street, literally, where you have all the big boys saying, don't worry, we're there. Now, what have these guys done? They have gone ahead and parked deposits with First Republic Bank. There's been a lot of chatter. In fact, CNBC has been also, putting out some source-based stories saying, why not go in and put in equity or look at buying the bank or do a merger? Now, that's the bigger question, because there's a fear there that as far as the bond portfolio of First Rand Bank is concerned, there are losses. There are lots of mark-to-market losses. There could be a big hole. So you don't want to park equity, but you're putting in deposits right now. So the top banks, the top four, are putting in about 5 billion each. Then the next strong, Morgan Stanley and the others, they're putting in about 2.5 billion. Then you have a clutch of smaller banks coming through. So it's 30 billion coming in. Is it going to be enough? I don't know. By the way, the stock, First Republic Bank, moved higher during the actual trading hours, and after hours, it's again down 15-16%. So I don't know if the last of, this whole monster of the banking crisis monster, if it's behind us or not, but we need to watch this script very, very carefully. Back home, the added sort of twist to the India tale is TCS. It is a company-specific issue. It's got nothing to do with the overall market sector, but it's going to be a talking point. It really will be, because the market was absolutely blindsided, didn't see this coming at all. Actually, no one did. It was a very surprise announcement. So Mr. Gopinathan will stay on till September as that transition sort of plays out, and, the new man in, K. Kirthivasan, he comes in. The good thing is he's been pretty much a TCS lifer himself. He's put in 30+ years with the company. So nothing is new with respect to the architecture, the culture and all of that. But just that the transition is happening at a very wobbly time when the IT sector has plenty of challenges to deal with. So we'll watch out for that, Mangalam. So as you said, I think there's, though it's a Friday, but there's plenty to keep us absolutely glued to the screen and at the edge of our seats.
Glued to the screen, edge of our seats. What we can also do is that, if the analogy of everyone pulling something in different directions and eventually the thing moves nowhere. Is that what we're looking at as well for our markets? A range and extreme volatility. Because yesterday as well, we had 3 rallies and all of them were sold into. It was a volatile session, and part of that could also be attributed to the fact that there was weekly options expiry towards the last hour of trade. But for all that's worth, we managed to close positive in the green after 5 sessions of declining. And how much did we lose in the last 6 sessions? 770 points. 16,750 to 16,850, extremely important as a support. And that's primarily because that's where we started the decoupling from. 16,750 in September was the low, from where we rallied about 13% in October and November. Cash market flows, again, all over the place. Nimesh said that there was a fair amount of buying at the institutional desks, etc. And that reflected. The FIs sold just about 282 odd crores, but a large part of that is also, factored by a lot of the large trades that took place. What's not supporting the market is the relentless selling by the FIs in index futures. Yesterday, again, 1,815 crore worth sale, and now they've started to give the split between Nifty and Nifty Bank. For the first time in a long time, we've seen higher selling in Nifty Bank than Nifty itself. So 1,000 crores worth selling in Nifty Bank, 823 crores in Nifty itself. FII longs, 11%. So that means effectively 9 out of 10 positions are on the short side. What does that mean? The net short exposure at 1.63 lakh contracts is the highest that we've ever seen. And I went all the way back to March 2020 as well, the pandemic lows. It was around 1.58, 1.6, never 1.63. So there is a fair amount of shorting. Everyone's on one side. At some point, something's got to give. Will it? Is the big question.
And then we'll have the stampede, the bears running for cover and a bull stampede whenever that short cover.
Whenever that happens again. But like everyone's been saying, it's a hope and not any data that suggests that there could be an up move. The SGX Nifty indicating an uptick of almost 121 points, and this is a God-given for bears because they love selling at the top. We've seen gap ups being sold into. Prashant spoke about 17,200 as an important mark. 14th and 15th March, the highs on the Nifty were 17,225 and 17,211. So that is a big resistance. The only swing factor for today, for us, could have been the Nifty IT. Why is that? Because NASDAQ rallied about 2.5% yesterday. But then again, that has been pulled in the other direction by TCS, which the management change has happened while everyone's talking about it being a company-specific issue, but it still has 4.5% weight on the index, the Nifty itself. So a lot of things being pulled in a lot of directions. Eventually, do we move anywhere or not is the big question. Edge of the seat, best view. Ringside view is better than, buy side or sell side today.
I thought you talked about the best views at the Wankhede Stadium today.
Yes, it is. But then for what it's worth, that will happen after
markets.
The markets.
All right, let's quickly get started then. We have the equity call coming in for the morning, and this is a call from Christopher Wood of Jefferies, who says 2022 was the year when U.S. equities suffered multiple contractions from monetary tightening. He says this year will be the year when earnings downgrades hit stock markets if U.S. recession forecast proves to be accurate. He adds that 2024 will be the year when markets will have to deal with the emerging credit problems in the private space. He says greed and fear has been recommending to macro investors a long bond and short loan trade in the U.S. But he adds clearly the question when leveraged loans should be shorted outright. He says this would seem as a good time as any if the recession forecast for Jefferies' U.S. chief economist is accurate. That is, the U.S. is heading for a 5-quarter recession, which will commence in the third quarter.
All right. On that note, let's also get you some money market views. Bhaskar Panda of HDFC Bank says a rescue package for mid-sized U.S. bank facing liquidity crisis and the announcement that a Swiss bank will have access to liquidity from Swiss Central Bank have calmed nerves across global financial markets. But he says that the ECB has raised interest rates by 50 basis points as expected, and eyes are now on the US Fed against this backdrop. He adds that oil rallied mildly and the dollar index is a bit soft. Given this global backdrop, he expects the USD-INR pair to trade in a range of 82.50 and 82.75 per dollar.
Well, on the bonds, Bhaskar Panda says that benchmark yields have been mildly lowered, tracking global cues and consolidation will continue. Hence, he expects the 10-year benchmark yield to trade in a range of between 7.35 to 7.4%.
Well, we have a lot of stocks to talk about as well, along with that market action. So in just a bit, this is the list that we're covering on our Top 10 segment. We'll be looking at Z Entertainment, Voltas, NTPC, Glenmark Pharma, Bharat Forge, Hindustan Aeronautics, RVNL and GMR Airports. These are stocks on the radar on the back of positive news flow. TCS and Samvardhana Motherson are stocks on the radar because of some negative news flow that surrounds them.
All right, let's get our first voice, and this is, of course, has to be a global one to begin the day. Daniel DiMartino Booth is CEO and Chief Strategist at Quill Intelligence LLC. She's joining us right now to take some questions. Thanks very much, Daniel. Great to have you with us here on the program. Appreciate your time. As we get into the last session for the week, and what a week it has been, do you reckon things are looking a little better overall, both in US and in Europe, especially on the banking side? And implications henceforth for equities, etc., or is it still very uncertain?
So I think we're still very much in tenuous territory. You've got First Republic trading down it's going across the bottom of the screen right now, trading down about 17%. in the after hours. There was news that came out from the Federal Reserve after the U.S. stock market closed that the uptake at the discount window was the highest on records, including taking out the highest from 2008, from the great financial crisis. So it's clear that banks are feeling a lot of distress if they're pulling up for $150 billion in very expensive liquidity from the Fed. So I think what's at the front of a lot of investors' minds at this point is, yes, we had a consortium of 11 banks come in and inject $30 billion into one U.S. bank. Yes, the Swiss National Bank is injecting $50 billion into Credit Suisse. But the question that I'm being asked more and more is it going to be enough?
What do you think, Daniel? I think that is the million-dollar, billion, or maybe trillion-dollar question, right? The show of confidence from central banks and some of the big boys on Wall Street, is it a sign of confidence, or is it a sign of perhaps further trouble beneath the surface?
So I think it's more a sign of stress and distress. You saw similar types of consortiums come together, whether you're talking about the 1907 financial crisis or whether you're talking about the 2007, 2008, 2009 financial crisis. When you have a bunch of banks come together and say, okay, we're going to join hands and make sure that we don't see systemic risk come unleashed, these aren't typically the things that instill confidence until you get a true stabilization in the market. And we're also looking forward to the unleashing of a global recession right now. Banks are going to be clamping down even more in terms of credit creation. And the U.S. economy, for one, is one that requires constant credit creation in order to function.
So in light of all of this, there is a Fed meet next week. What do you think they do?
So, I've been telling our clients that as long as there is nothing systemic that occurs over the next few days, that the body of evidence suggests that services inflation in the United States, at least, is running hot enough for Chair Powell and the rest of the officials on the Federal Open Market Committee to raise interest rates by another 1/4 percentage point. That's my base case. Again, assuming we don't have a crazy Friday or even a crazy Sunday like we had over the last weekend with a bank failure on a Sunday, to take but one example. If we don't, then I think the Fed presses forward.
You said that unless there is anything systemic, I mean, how long before it really gets systemic? Because these things usually start off as stray incidents and it only, is gradually stray until it suddenly becomes systemic.
That's exactly right. That's absolutely right. I mean, in 2007, we had Bear Stearns, and that was kind of the first shot across the bow. Do we know if Silver Lake, Silicon Valley Bank, and Signature, or is that a Bear Stearns moment? Or is this closer to what transpired a year later with Lehman Brothers? It's very hard to say, because what's happening right now compared to Bear Stearns all those years ago is the rapidity with which we're seeing things play out, and the fact that it's not just a United States isolated issue. We're also seeing, obviously, the unrest at Credit Suisse.
Okay, so Daniel, we've heard you carefully. Given all of this, what are you doing with stocks? Actually, what are you doing with money? Are you putting it in U.S. equities, elsewhere, emerging markets? Are you moving it to bonds? Where's the money going?
So I actually think long maturity U.S. bonds are a great place to be if we're going into the recession that most people now acknowledge is going to occur. And now that we've had multiple bank runs, most Americans are fairly in touch with the fact that they can get 5% on their cash. I don't think that was as well recognized before we started seeing bank runs. And precious metals are also doing extraordinarily well under the current circumstances. And this is what we effectively say, making sure that your portfolio is defensively postured until this wide level of uncertainty passes.
Daniel, just one last point. Is anyone seriously doubting that any of the larger banks are in trouble? Or because, what I heard was there is outflow from regional banks into larger banks, if anything. So regional banks are...
Correct.
Yeah, go on. Sorry, go on. Yes.
Small, especially small and regional banks, they have a much lower insured deposit coverage ratio, so they're much more vulnerable. And you are absolutely correct. The largest 4 banks in the country have been inundated, deluged with deposits since this happened, and that's why they're able, the largest 4, to give up $5 billion apiece in deposits and try and help prop up First Republic.
So the $160 billion, which has been borrowed from the Fed, from various Fed programs or windows, this is being borrowed by, I assume, smaller banks?
And potentially regionals. It's a very large number, actually. Again, it's the large. It took out the financial crisis 2008 high. And I think that was what made markets nervous after the close. So it's clear, I mean, banks do not want it. They're penalized going to the discount window. It's the last thing that they want to do. And yet there they are in record numbers. So we won't know what the identities are, but it certainly has instilled a higher level of nervousness into the markets that there are that many banks willing to take the penalty in order to get access to that Fed lifeline.
All right. Daniel, thanks very much. Great conversation. Appreciate you joining in here this morning on CNBC-TV18. And let's just hope that we don't get another accident Sunday evening.
Fingers crossed.
Fingers crossed.
Yes, thank you for having me.
Thank you. Well, we'll take our first quick commercial break here. We'll come back. Our list of top stocks to watch. Our team will be with us to detail that out for you. TCS, of course, top of minds. Stay with us. We're back.
Welcome back. The SGX Nifty has been painting a nice green picture. 116, 17 odd points is the pop that we're expecting at the open. Let's straight away drill down to the stocks that we need to watch out for this morning. Our team is standing by. And of course, topping that list is what else but Tata Consultancy Services. Rima, I'm sure you had a very eventful evening around 8 p.m. onwards last night. Tell us more. What's happening?
Well, TCS has announced the resignation of MD and CEO Rajesh Gopinathan. Rajesh will be replaced by a TCS insider and a veteran, K. Krithivasan, who's currently heading TCS's banking and financial vertical. Now, this news comes in as a surprise, completely out of the blue, because Rajesh was reappointed as the MD and CEO for a period of 5 years just last year, in March of 2022, which basically means he steps down 4 years ahead of his term coming to an end. That said, while transitions are never easy, this one is likely to be smooth, is what people tell me, because Rajesh stays on for 6 months to help with it, and plus TCS is a very stable senior leadership. About Krithivasan, as I said, he heads TCS's largest vertical, BFSI, which contributes over a third of the company's revenues. The problem is, this transition comes in at a time when the tech industry is going through a turbulent time. There are fears of growth slowing down, and TCS itself has underperformed its peer Infosys. Just a point one of the brokerages CLSA made about leadership transition. They're saying, given the age of TCS's senior leadership, Krithivasan is 58, COO NGS is 63 years. Would they believe succession planning could be a point of focus, especially for long-term investors? But right now, today, I suspect the stock could be in the red, given the street will have to digest this news, and ultimately, these are big shoes to fill. Back to you.
Rima, thanks very much for that. You know, I just want to say one thing, guys. If you guys remember when N. Chandrasekaran retired and Rajesh Gopinathan took over, you know, I dare say that was a much bigger change, right, as compared to this. The point I'm making is that organizations like TCS, I mean, they survive and they thrive.
Absolutely.
You know, irrespective of sort of leadership changes at the top. There could be some, I mean, as Rima said, right, a period of transition, a period of investors getting used to a new style. I mean, the company getting used to the new style of the person at the top. I mean,
and he's also heading the BFSI vertical. It's one of the largest for the company.
Well-respected and absolutely. And it's an interesting one. And maybe we see a bit of a dip or whatever is some analysts, etc., pointing out. The environment is tough. But does it really change prospects for TCS from a slightly longer-term perspective? Because of a personnel change, I mean, history shows that it is not. As I pointed out, the last change when sort of N. Chandra took a step back and Rajesh took over, presumably was a much larger one because N. Chandra had steered the company for a much longer time as compared to Rajesh, and of course was So that, I mean, these things happen and life goes on. Well, let's move on. Z is the other company which is in focus. Surabhi is here with a quick check of what's happened here. Surabhi, over to you.
Hi, thanks for that. So yesterday there were news reports from Bloomberg that suggested the Z Entertainment will repay $10 million to IndusInd Bank, and the repayment would be as early as today. Now the company has gone ahead and clarified to the exchanges that the news reports are speculative in nature. However, they are exploring several strategies, including a settlement to resolve this dispute. But they are not clear on which strategy they will pursue. But the fact that they are exploring these strategies is still a positive for the stock.
Z was the stock of the day in the second half yesterday, so important to watch out for how they go ahead and settle with their the people who owe them money. With that, let's move on to Vivek on Samvardhana. Vivek, the big block deal took place yesterday. What's the latest?
Well, you're absolutely right. We are actually tracking two developments as far as Samvardhana Motherson is concerned. Before I get to the block deal, in an announcement to the exchanges yesterday, the company has said that it is looking to acquire the remainder of the 50% stake that the company has in a JV partner in Austria, and this particular acquisition is going to be done at a little over 110 crore. So that's another development to keep track of. And as we mentioned, in yesterday's trading session, Sumitomo Wiring Systems, the Japanese parent, sold 3.5% stake. Some good buyers coming in, Coptal Mauritius as well as Societe Generale. Interestingly, what Sumitomo Wiring System has said is that in a rising interest rate environment, this particular stake sale was done to deleverage the balance sheet, and they have said that they continue to remain long-term partners with the Motherson Group.
Okay, so no indication of any further stake sale, at least for now, from that promoter entity. Thank you, Vivek, for the details. Back to Surabhi then. Surabhi, why are you watching out for Voltas?
So Voltas is also on my radar today, as the company's wholly owned subsidiary Universal MEP Projects and Engineering Services has won multiple orders worth 1770 crores in the electrical power distribution business. Now these orders are for FY23 and also include a solar power project. The projects are spread across 26 districts across various states like Uttar Pradesh, Madhya Pradesh, West Bengal, Odisha and Karnataka. So a green for Voltas.
All right. Thanks very much, Surabhi, for that. NTPC is in focus. Vivek, back to you.
Well, that's right. So NTPC, the expectation was, and this is along expected lines, the management has already indicated that they are looking to do a stake sale as far as the renewable arm of the business is concerned. Now, what's actually happened is that yesterday, Reuters has reported that in this particular development, what's actually happened is that the monetization portfolio, the bids have started coming in. So as per media reports, the equity value of 20% stake sale that the company is looking to do is almost coming in at 3,800 crore, which basically values the renewable energy arm at 19,000 crore. Now remember, this green portfolio of NTPC has almost 2.9 gigawatts renewable energy already under, which is already operational, and another 4.7 gigawatt, which is under consideration. March 1st, the company had transferred all of its renewable energy assets under this particular arm. So before March 31st, we are expecting to see a complete, the proper development coming in, and the names of the buyer as well as the actual stake sale with the valuation is something that the market is watching out for. It's a very important trigger for NTPC, so I expect some green on the stock in today's trading session.
Vivek, just a quick follow-up. They're looking to sell 20% in this renewable arm or even more. Do we have a handle on that?
Initially, what the management was looking to do was, in the past, they were looking to actually go for an IPO for this particular business, and then they were looking to do a part stake sale of between 10 to 20%. In the most recent interaction with our channel, they indicated that it's going to be closer to the 20%, and they had indicated that it is going to be at a valuation of slightly over 10 times EV to EBITDA.
Okay.
All right, Vivek, thanks a lot for that. That's about NTPC, a stock which has moved about 7% in the last 1 month. Likely to see some more green today as well. Ekta joins in with Glenmark. Ekta, some good news there?
Thanks for that. Well, yes, definitely positive news coming in for Glenmark. They've received acceptance from the US drug regulator for its IND application for a drug which is under development, GRC 54276. Now, IND basically means Investigational New Drug Application. What this means is that they can proceed with phase 1 and 2, which is a human clinical trials to check the dosage as well as the safety and side effects of this particular drug which is under development, and is being tested for cancer. So now this will be studied for treatment in patients who have solid tumors as well as lymphomas in the US. Remember, phase 1 and 2 is already ongoing in India. The company is also planning to expand it ex-India. What this means is that it could open up out-licensing opportunities eventually for the company. And while it is still in phase 1 and 2, there is a phase 3 as well as a submission process which they need to go through, not to mention the successful outcome of a phase 1 and 2. So yes, there is a gestation process, but the fact that they've made progress plus out-licensing opportunities possibly eventually could be a positive for Glenmark.
Okay, got that, Ekta. Thanks very much. We'll watch out for Glenmark. Back to Vivek. Vivek, you're dominating the top 10 list today. What's happening with Bharat Forge and HAL?
Well, some very interesting news coming in as far as, the defense space is concerned, and all of these stocks will remain in focus. So yesterday, the Defense Ministry has gone ahead and approved proposals of over 70,000 crore. Now, it's important to note that these proposals and the actual order wins will take some time to come in, but these proposals are for purchase of helicopters, artillery gun systems, as well as the BrahMos missile. HAL is one of the key beneficiaries of the order wins that have been announced yesterday. 60 utility helicopter marine choppers from the company will come, and the order is worth 32,000 crore rupees. Now, this order involves the actual delivery of the systems as well as the services and spares and the O&M, basically maintenance contracts. So, order is likely to get awarded over FY25 to FY26 is what we understand from analysts. Bharat Forge, the company supplies the artillery gun system, the howitzer, and that particular deal would be worth almost 8,000 crore. So watch out for both of these stocks. Some positive news flow coming in, largely along expected lines.
All right, big news from the defense sector, and these stocks have already seen a big rally already in last year itself, anticipating big purchases coming in. I'm watching out for a couple of stocks myself. One of them is GMR Airports, which because the board will meet tomorrow to consider fundraising. So that's one of the stocks we should keep on our radar. And the second one we'll be watching out for is RVNL. Remember, it's the end of the fiscal year, so a lot of orders get closed out. They've emerged as the lowest bidder for a project worth 112 crores. So mild positive news coming in for RVNL as well.
Okay, so plenty of news and a lot of stocks actually looking at positive news flow this morning. So let's quickly recap that list. Stocks that have positive news flow include Z Entertainment, Voltas, NTPC, Glenmark Pharma, Bharat Forge, Hindustan Aeronautics, RVNL and GMR Airports Infra. While stocks with negative news flow are TCS and Samvardhana Motherson. In fact, since we are talking TCS, let's just continue that conversation and get some market perspective on this as well. Moshe Khatri, MD at Wedbush Securities is with us. Moshe, thanks very much. Always great to have you on our show. So we got this, rather surprising news late last evening, India time. What are your thoughts? The person who's taking over is also an insider. He spent 30 plus years with TCS. Do you think it'll be a smooth transition? And what do you expect on the stock?
First, there's never really good timing for an executive to leave, especially in the context of Rajesh, given his significant and impressive contribution to the company. Secondly, TCS, in our view, has a very deep bench, and this will likely be a very smooth transition. Companies like TCS have such an amazing culture of nurturing executives and growing them from within, which on one hand is a blessing, but on the other hand, it's also a curse because you will see them leave to go somewhere else. And it's the nature of the business. You've seen that at TCS, you've seen that at Infosys. But again, the good news, as I said, is that these companies have a very, very deep bench, and they should be able to, bring in somebody else. And the new CEO or the replacement CEO seems to be to have a very impressive resume in terms of his experience. Obviously, focusing on BFSI, the largest vertical, et cetera. So, should be a smooth transition. Timing is probably not ideal given what the industry is facing as we speak, but it is what it is.
It is what it is. Moshe, the other thing is that from a medium to long-term standpoint, the COO, Mr. N. Ganapati, is 63. We have Mr. Krithivasan, who's 58 as well. CLSA has written that at some point, succession planning becomes extremely important for them, given the current age and experience of the leadership as well. How do you view TCS, given the fact that it's trading at a significant premium to the others as well?
Succession planning is something that you have in every large company in the space. I'm not surprised I mean, I think that it's kind of a given, if you will. The premium that TCS has had is a function of the execution and visibility and the fact that they've been pretty consistent. And, that's how the market kind of prices you these days.
Okay, I think we can actually go across to TCS now. Stay with us, Moshe, and listen, and you will want to listen to Rajesh here.
We have done well together. We managed to grow to a run rate of now $28 billion, and the market has also been rewarding us. And most importantly, from our employee side, we have continued to attract the best talent, and people love working for us, as it shows through in our retention and our ability to continuously transform. I want to also thank our customers who have continued to trust us and have continued to repose their trust in this relationship, which goes beyond individuals, and it has been with the institution throughout. And that trust has been the cornerstone of our success. And I'm grateful for everything that I enjoyed from the start. And I'm sure that it will also continue as Kriti now takes over. So overall, a day of mixed feelings for me. I'm happy where we are. I'm also a bit sad now that the reality of and momentousness of this step is slowly sinking in. But like in all these things, I think once you make up your mind or the thought starts coming into you, it is best to do it early rather than to sit and think about it for too long. So I, once again, thank all of you, your love, your attention, your questions. It has also been a big motivator for us for egging that performance on. And I'm sure that will continue to be the case with TCS as Kriti takes it on. So let me pause here and hand it over to Kriti, and then we'll be happy to take questions.
Sure. Thanks, Rajesh. Good morning, everyone. It's absolutely a great honor to be chosen to lead this organization. And it's, of course, in my view, big responsibility as well. TCS has been built on two important foundational pillars of customer centricity, as well as a huge set of employees who are always committed and who are given their best to TCS. So it gives us a great platform of growth. And over my 35 years in TCS, I've enjoyed every moment working with this team, and particularly the leadership team who has continued to foster the culture of one TCS and working only for the betterment of TCS, betterment of our clients. And with all the best wishes from everyone, I'm hoping to lead this company and double down on our core pillars of customer centricity, meeting more employees and meeting more customers and making the relationship stronger. Looking forward to working with all of you in future.
Thank you so much, Kriti, and thank you so much, Rajesh. We're going to throw the floor open for questions, as Rajesh said. So I strongly request everybody, for interest of time and so that we can accommodate as many questions, we would request you to stick to one question, please. And of course, we'll be meeting very soon again for the quarter results press conference. So you'll have them to answer all your questions. Let's start with ET now. Nikunj Dalmia. Nikunj, you can unmute yourself and switch on your camera.
Rajesh, good morning. Thank you for joining us. Rajesh, first my sincere compliments. I mean, TCS shareholders, I'm sure they're mighty excited under your tenure. The company has enjoyed great growth, great P multiples, and really became a formidable force to reckon with in the Indian IT space. But Rajesh, even though TCS has enjoyed a very stable quarter, it has a very stable leadership, the timing of your exit, Rajesh, is something which perhaps is making everybody slightly nervous. At a time when the IT sector is getting bulldozed and concerns are there in the US BFSI space, do you think this timing could have just waited?
Nikunj, if you look at it over the last 10 years, I mean, this is probably the most stable time that we have seen in many years. Think about the financial crisis, think about the pandemic, think about everything else that went on, the war that was started off last year. So this level of volatility, I would say, is par for the course. And yes, there will be some ups and downs. So that definitely is absolutely not a question. In fact, in times of crisis, we have always come together and absolutely stood together as a team. And then when I was reflecting in terms of what would be a good time, I felt that there's no better time than this. And also it was important to do this before the start of the new financial year so that the incoming CEO, in this case, Kriti, has that full runway to play with it. So from immediacy perspective, just before the start of the year so that the whole year can be owned. And from a slightly longer term perspective, we have brought the volatility of the pandemic to a fair state. We have registered very strong growth, first bouncing off the pandemic lows with 15%. And then over the last 9 months also, we have still grown at 14.8%. And crossed big milestones. We crossed 7 billion and we are now at a run rate of 28 billion. So when you look forward, I don't think there is going to be another period where there will be significantly difference in that stability for it to be. So it goes back to that question that you asked it, why now? And I asked myself, if not now, will there be a better time? And the frank answer was, I couldn't think that there could be anything better. And therefore, it made most logical sense.
So Rajesh, the immediate follow-up question is, when did you inform Chandra? What was his first reaction? And how did it go through? And what is next for Rajesh Gopinathan now? Everybody's curious about that. So I'm blending two questions into one.
Yeah, in terms of, I've been having discussions with Chandra off and on. And of course, when there is an immediate problem, we always focus on that. But in moments of retrospection, I've always been telling him that, at some point I want to do it. And so that's been an ongoing dialogue. The immediate one was, of course, that, as I said, and I think this is the way it happens with everybody probably, that one day you get up and then you say that, okay, we have thought about it and spoken about it long enough. It is better to, pull the trigger, as it were. So that happened just a week or so ago. But it's a conversation that has been ongoing. What next is first, I have to make sure that the transition happens smoothly. And with Kriti being there, I don't think that is a challenge at all. But I owe it to all our customers, all our colleagues, our employees, and all stakeholders to make sure that I am there for whatever time that Kriti needs. And if nothing, it might be even symbolic. But I definitely have no plans to skimp on that and will be available to Kriti 100%, not just during this transition period, at any point in time in future. After that, I want to take some downtime and spend some time with family, sit back and then think, many ideas are there. But now that the trigger has been pulled, I need to start crystallizing what those are. And it would not have been appropriate for me to go down that path while I was doing something as important as this, and which required more than 100% of my attention all the time. So that's the plan. So probably we will get to catch up and have that cup of coffee that we have been always talking about. And I'm looking forward to some downtime.
Thank you. Thank you, Nikunj. Thank you, Rajesh. Reema Tendulkar from CNBC. Reema, you can try to switch on your video and audio and join, please.
With a heavy heart, I'm, asking these questions, Rajesh. I'm truly going to be missing all our conversations every quarter talking about the numbers. So while you tear up, I've got a very heavy heart as well. But Rajesh, my first question is, when you chatted with Chandra about succession planning at TCS, who next? What were the thoughts? What were the conversations like? I know TCS has had a policy of promoting the insiders, but could you help us, talk about what led you all to narrow in on Kriti as, the next CEO? What were the qualities? Why did you select Kriti? That's, point number one. And secondly, in the next 6 months, what are the steps that you will be making sure to ensure that the transition is going to be extremely smooth? And Kriti, my question is, what would be your top 5 priorities now for the next 5 years? Will reversing TCS's underperformance versus Infosys be a priority? Will you be looking to change the margin guidance? Any big strategic changes, any big, changes in the organization that you would like to effect? Thank you.
Thanks, Reema. it's very nice to hear you say that you're going to be missing it. We used to be dreading your 5 pages of notes, and it was easier to navigate the board meeting than the day after. But jokes aside, it's always been a pleasure. As I said, it's something that kept on egging us on. Your question was that how did we narrow on to Kriti, right? See, in TCS, we have a very transparent and very cohesive culture. We have always said that it's been about collective leadership. So the board has very high visibility to the, a very large part of the leadership team, and there is very close interaction on an ongoing basis. So the top 10, 15 people get in front of the board many times a year. There is a lot of interaction. And plus, of course, Chandra, as the chairman, knows each and every one of them personally, professionally for decades. To this is very unique to who TCS is, and we have not tried to go away from that. The choices were, I'm sure, Chandra and the board will weigh in on that maybe at a later point. But next one.
Great. We have Swati Khandelwal from Z Business. Swati, you can take your questions and switch on your video.
Gentlemen, and of course it's a mix.
Okay, well, that's the outgoing CEO and the incoming CEO, both on the same platform answering questions. Moshe is still with us. Moshe, I trust you heard the conversation there. Any additional thoughts before we wrap this up?
As I said, there's no ideal timing for this event. That's typically the case. And I guess there are a lot of talks about transition and smooth transition. And, it seems that they seem to be in a pretty decent shape. I don't think the market's going to like it. But again, the market ultimately will get over it because it's a very large company. These are executives that have been with the company for a long time. They've probably been marked as next successors down the road, and he was picked. So, but that's kind of, as I said, it is what it is, and it's part of the business, unfortunately.
Right. Moshe, you recently turned cautious on the IT sector. Just wanted to understand, okay, what we'll do is we'll continue this conversation in just a minute. Take a short break, come back. On the other side, we have Hemang Jani, who's joining in for some fundamental ideas as well. Welcome back. We're still in conversation with Moshe. Moshe, just before we let you go, on the sector as a whole, we've discussed TCS at large. You recently turned cautious. Just wanted to know what will make you turn positive, or what are the triggers that you're watching out for, at least in the next 3 to 6 months?
Yeah, in our note from earlier this week, we suggested that the outlook for the sector remains fluid, and fluid in the context of typically macro volatility or increased macro volatility, a lot of noise. What happened in the banking system this week or last week, in our view, that probably turns into what we call procrastination in terms of decision spending, decision pause. That probably gets sales cycles a bit longer than expected. And typically you get deals committed for but not funded. So that actually impacts visibility for the sector. So, we were kind of hoping to see some momentum starting probably a couple of weeks ago. And unfortunately, we haven't seen that. So that's what we're kind of talking about. So it seems that the numbers are going to be a bit more back-end loaded for the sector for the year. We thought that we're going to see some sort of a decent uptick in sequential growth in June. We may not see it. But as I said, the situation is fluid, and fluid means that things can get worse or can get better. And I think the situation is just very dynamic. Look, the funding is there for projects, but if the market or if enterprises are not really comfortable with the environment, they're just not going to fund these projects. And I think this is where we are right now.
Okay, got that. Moshe, good to have you on the show. Thank you very much for your perspective and for your time. We do have to take a very quick break. We'll come back on the other side, get you, of course, a technical check on the market as well, a couple of trading ideas, and then we'll line up with our fundamental experts as well. Technicals with Mitesh Thakkar and Shrikant Chauhan, and then the talk on the fundamentals and a couple of stock ideas.